Southeast Radio's Business Matters with Karl Fitzpatrick.
With the counting of the European election votes taking place today, it's timely that our next guest, Sarah Collins, European Correspondent for the Business Post, is acutely aware of all the relevant EU matters right now. So why is the EU looking for new options to fund its budget requirements, and how might this impact Ireland? Sarah joins us now to delve into these matters. But Sarah, what are the key business priorities in the EU right now?
Most of the sort of Irish money ministers, most of the top EU policy wonks would say the Capital Markets Union. And it's this kind of nebulous concept that I've been trying to get people to define for me, but it's really difficult. And it's essentially the EU's bid to unlock private investment. So the EU says that so many trillions of euros are sitting wasted in low interest deposit accounts. They want more retail investment in European companies. They look at the US and they say that capital markets there just work better. Everybody's involved in them. You know, ordinary people are investing in products that to Europeans would be either scary or they just don't know. And I think that they would say that there's a lack of financial literacy here, but also maybe a fear of investing rather than the traditional saving. So there's been a slew of EU laws over the last decade that has tried to change that, but it hasn't really got off the ground. And I think that's the biggest preoccupation when you talk to EU commissioners. And when you talk to like the Irish money minister, Pascal Donoghue has been working on this for a while with Eurozone finance ministers, trying to get a sort of plan of action in place.
And I know that the EU Budget Commissioner has recently warned that member states may need to come up with new ways of funding the EU. But why is this the case?
Yeah, so the EU over the last, let's say, decade has been borrowing more and more to fund its priorities. So we have the EU budget, which is funded mainly by national contributions, but the EU can borrow on the back of that. They did it during the financial crisis to help countries like Ireland and Portugal. They set up their own rescue fund even. That's the sort of more of a cobbling together of national contributions. But during the pandemic, they created this €750 billion recovery and resilience fund. Ireland has gotten or has been promised around $1 billion out of that, but the biggest beneficiaries are countries like Italy and Spain. It goes to projects that are kind of green. It goes towards broadband upgrades. It can go towards anything of the sort. The EU needs to pay back that money, and they also need to pay interest on it. And that's what I think the EU Budget Commissioner is really concerned about. That has to start being paid back in 2 or 3 years' time.
How does the EU's current funding model actually work?
So the EU budget is around €1 trillion over 7 years. There's a good few funds now sitting outside the budget, including that pandemic fund that I talked about. But the budget itself, the money that goes to farmers, the money that goes to, train lines, the money that goes to broadband upgrades, it comes from national contributions for the most part. The EU also takes customs duties. There was a new plastic bag tax introduced in 2021, but it's small fry. The EU used to get a portion of sugar duties and things like that, but most of that is gone. The bulk comes from national exchequers.
So, Sarah, are we likely to see new or increased taxes introduced, and if so, in what areas?
The EU would love that, and they want to have their own sources of revenue, their own revenue streams. A couple of years ago, the Budget Commissioner put forward this paper where he suggested a couple of carbon-based taxes and a couple of corporation tax-based revenue streams. Most experts think that they might get one of the carbon taxes through. The EU has or is slated to introduce a new carbon border tax. So essentially, they don't like imports coming in from countries that are not as regulated as the EU when it comes to climate change, that those products can sell for cheaper on the EU market. They want at the border, so customs authorities would collect this tax. They think that can go, all or in part to the EU. They've also talked about using revenue from the emissions trading scheme. Corporation tax revenue stream is way more controversial. The Irish government hates it because they would be number one in terms of contributors. It essentially would take a portion of like windfall revenue from corporation tax, from the Department of Finance, from the Revenue Commissioners. It wouldn't take them direct from companies. It's highly unlikely to get through, though, because Ireland's not the only one against it.
Are we likely to see them spending less on capital projects over the coming years?
I mean, that's the threat. Look, we have the pandemic fund, which has committed to long-term projects. The money has to be spent quickly. I think it's 2026 is the deadline. You have to, commit the money. But the project will go on for years. So that kind of will run its course. But the EU still has to pay that money back. The Budget Commissioner, Johannes Hahn, he's warned that unless the EU gets its own revenue streams, or unless, EU members decide to up their national contributions, that some projects or some, entire budgets will have to be cut. I think he pointed to the Common Agricultural Policy because it's one of the EU's biggest budgets. There's also regional policy, which funds things like roads and water and upgrades and broadband. It's unlikely that the budget would be cut a lot. It hasn't been recently, but that's always a threat in the run-up.
So with that in mind, how does Ireland plan to boost the EU budget?
So whenever you talk to Irish finance ministers, they always say that Ireland's ready to contribute more. How much more is the question, and how that contribution is passed through is the bigger question. So if you're talking about a direct contribution from the Exchequer, I think that the government probably wouldn't have much of an issue with that. If that contribution is raised through anything that looks like a corporation tax-based thing, I think the Irish government would have a much bigger problem, because they see that as maybe opening the floodgates to bigger moves on corporation tax. And their mantra is, keep tax laws consistent, ensure companies know what they're going to face in the years to come. And so I think they don't want to open the door to anything that could hamper that.
And finally, Sarah, there has recently been some controversy about government debt and deficit rules. What are the concerns in this regard?
So this has been a long and drawn-out story. The EU has these debt and deficit rules in place since the 90s. The reason is because they believe, especially the countries that make up the euro, you have to have responsible spending and borrowing policies if you're in a common currency. Otherwise, you might derail the value of that currency, right? They did a big overhaul of the rules after the financial crisis about a decade ago. They've just done another overhaul. It's gone through. What it means is that countries with very high debt and high deficits for years running will have to do more to bring those down, but they'll get more time. The EU was accused in years gone past of their rules enforcing austerity on countries, and I think they were desperate not to be accused of that this time. They think they've done as much as they can. Germany had inserted some more, let's say, like safeguards in this latest overhaul that make it ensures that countries have to really maintain their deficits well below the limits that are set, and they do have to pay down a certain percentage of debt each year, but they'll get way longer to do it. The Irish government doesn't really have an issue with these rules because it's a surplus country. They do, though, always point to the fact that the reason we're a surplus country is because of windfall taxes. If they weren't there, we'd be a deficit country and we'd fall under these rules. So, I mean, they're always keeping an eye on them, but it looks like they will offer the Irish government and government become somewhat of a free pass when it comes to their budget.
Well, if you've just tuned in, that was Sarah Collins, the European correspondent with the Business Post. And I'd like to thank Sarah for joining us on this very busy weekend.
Southeast Radio's Business Matters with Karl Fitzpatrick.